I was able to make $8,000 off of these two trades, and not only that, but my mentee Shane was able to make 23 grand on Top Step and place number one by using this strategy. Again, I'm not here to tell you this is a magic concept. I'm not here to show you something I invented, right? This is simply how we use a book map and how we use database tools to take these trades, right? Making huge profits and whatever, it always seems like it's super hard or like you need crazy size, when in reality what you need is a data-backed edge and understanding of how the market actually books, right? Because with this strategy, you'll be able to take trades that are not only backed by volume and backed by big players, but have a higher chance of giving you better risk to reward and a higher chance of actually playing out because you're trading with the actual volume and you're trading with real stuff, right? It may seem super hard to you right now when you're seeing the book map and whatnot, but I'm here to tell you guys exactly how I find a setup and steps 1, 2, 3, 4, 5, right, A to Z, on how to go from reading the book map at first all the way to finding a trade that you can take. So again, this was Shane using the book map. He got 23k in a day, and this is the two trades that made me $8,000 in just a single trading session. So what are we going to do with the book map? First, we're going to find liquidity. Then we're going to spot the gamma levels and find high volume events. Now, if you've never seen the book map before and you're just getting into this and you don't know how the book map even works, this video is not for you. Click the link right above so you can do your first book map training. And then once you learn what it looks like and how to actually trade it, come back here and learn how to take some good trades. So first, right, let's find some liquidity. First, we're going to find the buyers and sellers. These are going to be the liquidity areas, and we're going to see what type of orders they are. Again, the buyers and sellers, it's going to be the red hot liquidity that we can see over here, right? This is orange, this is red hot. So these, again, buyers are below price, sellers are above price. So first, we're going to find the buyers and sellers. Then we're going to find our gamma levels, right? Our gamma levels, I personally get them via Mentor Q. I stream them every single day, so you guys can just click below, join the trading floor, look at them with me. But we have GEX levels, which is where dealer exposure rises. These are good levels, not my favorite. HVL levels, these are some of my favorites, right? High volume levels. There's heavy dealer presence, and we get some nasty rejections at those levels sometimes. Then we have the put support and the call resistance. The put support is essentially when dealers from options, they're hedging their trades by buying in futures. Call resistance, same thing, but they're hedging their trades by selling in futures. And again, we get a lot of market buyers and sellers because of the hedging at this area. And then the gamma wall is where we get most of the transactions. This kind of acts like a magnet, right? Price will, if we're close to the gamma wall, whenever price gets away, it will come back into it. Whenever price is at it, it'll get choppy and then burst. Pretty straightforward. And then high volume events, we're going to see icebergs and stops. Usually we want to see around 150. And they trigger major moves, right? We're going to see a strong continuation or reversal after these high volume events, right? So in what order are we going to do this? First, we're going to find a level to trade from, right? We're going to find either a rejection at a gamma or a blind spot, right? Blind level is the same thing as a gamma, but let's say an ES. And then we traded the version on NQ. Then we're going to either reject it at an HVL, find put support trade, find a call resistance trade, or find a gamma wall trade. Right, and then we're going to build the idea from these. I'm going to show you guys some examples in a bit. Now, after that, we're going to look for liquidity at or near a level, right? We want to see what type of orders came in. So let's say that we went lower, again, just for the example, into a call resistance level, right? If we went into a call resistance level, we know that sellers might be present. So there's two things we want to do. Either we want to look for absorption or we want to look for sellers to step back in, right? If price went lower into a call resistance level, right? So let's assume that this is a call resistance level. Let's make it nice and red. Okay, perfect. So if price went lower into a call resistance level, right? This is, for example, 1. Let me make this thick. There we go. So if price went lower into a call resistance level and we had passive buyers over here, right? So we had some liquidity down here. Then we can expect some sort of bounce, right? But if price went higher, right? If price was coming from the underside and it went higher into a call resistance level and we had some liquidity here, then we can expect the sell-off. That's why it's important to understand the context of these levels. After that, we're going to wait for a high volume event, again 150 stops for icebergs, and we're going to mark out the zone where we had these stops for icebergs. And after price leaves the zone in the direction of that idea, we place the trade with the stop loss at the bottom of the zone. So first trade we're going to see here is, you guys can see that, again, price had gone lower and it was rallying above. We went above the call resistance area, which kind of shows us like, okay, the sellers aren't really here anymore because price rallied above call resistance. And we also had this liquidity here, right? We had this liquidity area, which price broke above with absolutely no issue. Now, what I'm seeing over here, right, first we get 480 icebergs and we create this zone right here. However, we never close above this green line. It's like where the zone ends. We never close above here. Therefore, there's no trade. Price continues rallying, and then we get another high iceberg event when we get 211 icebergs. You can see that right here. So then once we break above here in the green, right, this trade we took it live, this is where I enter my trade. I put my stop loss at the bottom of the zone, right? The reason I do put it here is because we have this liquidity here, these buyers that keep supporting price as it goes higher. So that gives me confidence, right? And then we have the gamma wall. Again, we said that whenever price leaves the gamma wall, right? Let's say price left the gamma wall. We're looking for a rally back into it. So my full take profit was at the gamma wall, and surprisingly, we got a high volume event here. So then I take my trade into the gamma wall, which also had some liquidity, as we can see over here, which is outlined, right? And look at what happens. We have our high volume event here, enter once we break above, and then we're good to go. We're off to the races. Pretty straightforward. Now let's look at a sell example, right? We have this high volume event over here, and we see that we have all these buyers coming in, right? We see the volume over here. It is bullish volume, and for some reason price fails to go higher and then breaks lower. What does this tell me? It tells me that we had absorption. Not only does that happen, but I see that we break lower and we get a high volume event with 265 stops, and we break up below one level of liquidity. So we have our key level, right? We have the gamma wall. We broke under. We tested back here. We're coming into the gamma wall, so now we can expect a rejection away. We have our liquidity. We broke under here, and we had our high volume event here. So what am I going to do? Am I going to short immediately? No. But once we get here, right, once we're back into the gamma wall and I see another rejection, right, it rejects one time. It doesn't really do much, but we do create this low right here. As soon as I see that we're breaking this low again and we break this liquidity right here, this is my sign to go short. And as you can see, we ended up going short from this area, right? It rejected here, came here. That's the beauty of the book map too. It also gives you some really good entries. And then we can target, guess what? The call resistance level down here. Why? Because it also had some liquidity. So again, guys, you don't need a million confluences. You don't need to be like a crazy genius market maker. All you need is a simple system like this and be able to repeat it consistently. Our win rate so far this month has been around 65%, so it's been pretty good. And our average R has been 3.7, which is huge in comparison to what's normal. So if you guys want to learn how to do this yourself and just have me guide you guys along the way into using this to get to 10K per month, just like Shane was able to make 23 grand in a single day, just click the link below, fill up the application, foresee it in the trading floor, and if you're a good fit, I'll reach out to you guys personally.